Good day and welcome to Project 8489. The structure of the walkthrough will be firstly, explaining the layout of the spreadsheets and where relevant calculations can be found. Secondly, a walkthrough of each of the three options and their results and the relevant assumptions made, as well as the related calculations. And thirdly, the sensitivity analysis and conclusion. The first sheet, named Explanations, gives a quick overview of where different elements in the workbook can be found. It also explains the cases. The cases have been formulated to keep track of the different scenarios or options the client might choose, for example, whether to install laminate flooring or not. The cases and their different combinations are referred to in each of the three financial options. Cases 1 and 2 are the options the client has of installing laminate flooring. Cases A and B refer to the choice between the two financing options, namely a personal loan and refinancing the apartment. And cases I and II refer to the scenarios of either having the same tenant for 5 years or having a new tenant move in each year. For example, case 1.A.I referred to the scenario where laminated flooring is not installed, a personal loan is used as financing, and a new tenant moves in each year. The assumptions are also listed in this sheet, but I will explain them as I walk through all the calculations. For each financial option, after-tax cash flows were used to take into account the effects of income tax, and this was done for each combination of possible cases. Where cells are colored, the relevant calculations can be found next to the tables. Operating income for option 1 included the client's salary as well as rental income. The expected rental income calculations can be found in the rental income calculation sheet. Here, the rental income for each was calculated based on whether a new tenant would move in each year or the same tenant should rent for the entire 5 years. If a new tenant was to move in each year, the client can increase the rental income by 8%. But if the same tenant stays for 5 years, the client cannot increase the rental amount by that much. 5% was chosen based on personal experience as well as a conservative estimation. Expenses for option 1 include plumbing costs, painting, the installation of the stove, agent commission, transfer costs when the apartment is sold, rates and levies, and laminated flooring for the relevant cases. All of the calculations of these expenses can be found in the calculation sheet. One assumption is that the agent is only paid when her services are used. In this case, each year the apartment is rented out to a new tenant and the year the apartment is sold. Rates and levies calculations can be found in the rates and levies calculations page or sheet, and these were based off of inflation. After the calculations were made, the preliminary net present value was calculated. Next, the outstanding balance on the client's mortgage was calculated and subtracted from the NPV as well as capital gains tax. The total and final NPV can be found at the bottom of each after-tax cash flow table. The same was done for option 2 with the same assumptions, but now furnishing the apartment as well as the service cost of hosting on Airbnb is included in the expenses. The rental income for option 2 was calculated based on rates given by Airbnb on how much hosts can expect to make on their apartments. An assumption was also made that by leasing an apartment on short-term leases, you cannot expect to be fully booked right through the year. Therefore, it was assumed that the apartment would not be booked for at least 1 day every 2 weeks. When choosing the unit trust to invest in, a number of factors were taken into account. The Allan Gray Balanced Fund was chosen since it caters to customers who are looking for steady long-term capital growth, are ideally investing for at least 3 years, who wish to invest in a unit trust that complies with legal investment limits for retirement funds. This matches the owner who needs steady income, not too much risk, on the higher end of income, getting closer to retirement, and in this particular case is going to invest for 5 years. Expenses for option 3 included agent costs, investment fees, and transfer costs when selling the apartment. An assumption was made that the client will first pay off her outstanding debt on her mortgage as well as the renovations, namely the plumbing, before she invests her money in a unit trust. An investment return of 10.01% was used, since this was the average investment return over the last 5 years for this particular unit trust. An NPV was once again calculated. All relevant calculations can be found in the calculation sheet, such as depreciation, the MAR, property value estimation, capital gains tax, the annual routine maintenance, agent costs, salary over the next 5 years, initial costs, Airbnb service costs, and transfer costs when selling the property. All the assumptions are included in the calculations. The conclusion was based off of 3 different comparisons to ensure the correct recommendation is given. First, the NPV values were compared, and it was found that option 3 had the highest NPV value, therefore making it the most profitable. Secondly, a risk and sensitivity analysis was done to analyze the effects of changes in certain inputs. It was found that the NPV and selling price of the apartment in option 1 had an inverse and direct impact on one another. As the selling price for the apartment rises, the income tax, capital gains tax, agent costs, and other associated costs also increase, decreasing the NPV value. Thus, if the apartment were to have a higher value than predicted in the calculations, it would have a negative impact on the profitability of that option. Another sensitivity analysis was done for option 3 to analyze the effects of a decrease in investment returns. It was found that even at the lowest guaranteed rate of return, which was 2% per year, option 3 still had the highest NPV value. Thirdly, softer factors, namely convenience, were taken into account. This includes the fact that option 1 and 2 would require more time and effort to execute, since tenants require assistance and selling your apartment means giving the responsibility to someone else. After taking all of these aspects into account, it can be concluded that option 3 will be the best option with the lowest risk, highest NPV value, and most convenience. Thank you.